Part 1. Hope you have already watched an introduction to Forex trading video, which explains the basics of currency market and currency trading. Now you have to learn to identify the optimum moments to buy or to sell. The science of identifying the optimum moments of buying and selling is known as technical analysis, which is also known as chart analysis. Technical analysis is a science. It means it is governed by clear and rigid laws. We will use computer to plot the price charts, and we will learn to draw some lines on them. These lines help us determine what will happen to price in the future. They also give us an insight into how long price will remain above or below these lines. Different kinds of price charts. The simplest price chart is a tick chart. On the tick chart, each new change in the prices is charted by standard move across the chart. The chart takes no account of time. So, the more times the price changes, the more moves are made across the chart. Tick charts are not used in technical analysis. Bar chart. With a bar chart, only information about exchange price on any one day is shown on a vertical line. Let's look at the price changes that can happen during a day. Then, you will see how the price changes can be shown on a vertical line, which is called bar. Every day, the price opens at a certain level, and finally at the end of the day, it closes at a certain level. There is also a high and a low price for each day. All of these four prices can be shown on a vertical line, which is called bar. Candlestick chart. Candlesticks have exactly the same system as the bars, just they have a different appearance. Candlesticks are very important indicators that can be used in locating the best buy and sell signals. We will talk about the candlesticks in some other videos in details. The candlestick body can change color. If the close price is higher than open, the candlestick is called bullish candlestick, and it can be shown with a white or green color. If the close price is lower than the open price, the candlestick is called bearish candlestick, and it can be shown with a black or red color. Many traders find the candlestick more visually appealing and easier to interpret. This is a candlestick chart. With an uptrend, the chart widens. With a downtrend, the chart on the contrary darkens. We will talk about the trends in more details later. Trend. A trend is the direction the market is moving in. If each subsequent peak is above the previous one, we have an uptrend. If each subsequent peak is lower than the preceding one, we have a downtrend. If the peaks and valleys are at the same level, it is a range. price can move in three directions: up, down, sideways. If the market is trending up, it is time to buy. If it is down, sell. If the market is ranging, you'd better to do nothing. Renko Chart. Renko eliminates the noise and makes the chart much simpler. If you like to have a simpler chart which has less noise, you can use Renko. Support and resistance level. The last local minimum is known as a support level. A horizontal line drawn through the last price peak is known as the resistance level. When the price breaks above resistance level, the broken resistance level will change to a support level. Similarly, when the price breaks below a support level, the broken support level will change to a resistance level. Plotting support and resistance lines on trends. To plot a support line on an uptrend, you just need to connect the most visible lows. To plot resistance line on a downtrend, you just need to connect the most visible highs. How to make money with support and resistance lines. When you are in an uptrend, what you do is buying at the support line. You can sell when the uptrend support line is broken. When you are in a downtrend, you can't sell at the resistance line. You can buy when the downtrend resistance line is broken.